All right, guys. Good morning. Good morning, everybody. Happy Friday. It is November 11th, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Um, well, what a day yesterday, right? What a day. If you were with us for the morning note yesterday, we talked about the CPI number being less than expected. If you're a follower of us on Twitter, we do have the little check mark now. It's $8 a month, but it's worth it. So you know that we're the real thing. We're the real GAR Capital. There's a lot of scammers out there. I've had some people say, "Why would you pay $8 for that?" I mean, listen, I pay for this Bloomberg. Obviously, we do. We pay for the Bloomberg. We pay for investing.com. We pay for FinViz, all that stuff. Wall Street Journal subscription, Bloomberg. Bloomberg is included. And what else? CNBC Pro. So all of those things are necessary tools for us to help us get that edge for you guys. So again, we do the $8 fee for Twitter, so you don't have to. How's that? That sounds a lot better. Okay, so we're continuing on yesterday's pattern yesterday with a huge sword job yesterday. I mean, I hope you were part of that run. It was fun, obviously, to see if we went ahead and let's just take a look exactly how far we went yesterday. And it was an insane day. Let's go to CNBC. Here we go. Just so you see, Dow was up 1,200 points yesterday. S&P up 207 points yesterday. That's 5.5%. The Nasdaq was up 7.35% yesterday. That hasn't happened since 2020. That's April 2020, which also indicated the bottom, the last bottom. If you guys remember, you've been part of the note for a while, part of GAR Capital's team. I've been saying a bottom now for a little bit, since about maybe five or 6 weeks ago, maybe. So let's go ahead and get to that pattern. Again, we'll go over the levels and see where we move from here. CPI was great. My 2 cents on it. Again, it wasn't spectacular. Rents should have gone down a little more. Obviously, that's lagging. But again, we talked about this on Twitter that any glimmer of hope, guys, this is what's going to happen. So here's the next glimmer of hope that we might get in terms of another rally, because it is possible. I just don't think today. So let's temper expectations. But we have one more shoe to drop, or one more piece of really big, oh my God, that's it, we're going to soar news that is really not in our control, obviously. It's Russia and Ukraine. Russia did pull out of certain parts of Ukraine today. I just saw that on the Wall Street Journal. Let me see if I can bring that up. Actually, you know what? Why bring it on my phone if I could just show you guys here? So this would probably be the other catalyst if we actually decided to soar. We would need Ukraine to pull out of Russia to pull out of Ukraine. Excuse me, I'm trying to read two things at once. Ukrainian forces enter Kherson. So again, they were pulling out of somewhere. Let me see if I can get this world. Let's see, Europe. Let's see if I can get that. Here we go. I know I had the headline here. I literally just got the headline. Let's see. Yep. The COVID news that came out, they're going to pull back some restrictions. So China stocks were up overnight. We'll go over that here in a second. I don't have the exact headline. Oh, I'm so pissed that I didn't find it and I didn't retweet it, but it's regarding Ukraine and Russia. So again, if we do get some kind of news of a Russian pullout or a peace plan, that would probably be the last one of these kind of big spikes. Just like anything else, guys, expectations breed more expectations. And with more expectations adds disappointment. I'm glad that we got this move. Trust me, I am. But at the end of the day, guys, don't expect this every day. Don't expect this just to continue up to 4,700 by the end of the year, because it's not going to happen. So again, temper your expectations. We're going to chart it here in a second. We're going to find our levels. We're going to find our path. And then we're going to see what we can do moving forward. Again, but the other big piece of news that we might get another short squeeze ignition higher will be Ukraine-Russia peace deal. There is no talk of that. I don't want anyone to think that that's already the case, because it's not. But again, if that were to happen, you would get a similar price action. Just a heads up. So again, if you do see it again, more than likely it's probably because of that. CPI. We have the CPI number that came in yesterday. We talked about it. The next CPI will be next month, and that will be before FOMC. So the FOMC really can't do much with that information. The market is now pricing in 50 basis points. I was pricing in 75. That has now changed. I will go ahead and stick with the 50 basis point forecast that the market has. There is a possibility of a 25-point raise. If we do get a 25-point raise, that would be very nice for risk assets as well. We've talked about seasonality. This is nothing new. This is nothing that has been absolutely surprising. What you had was everyone who was short the market at the same time at the lows. And what happens? One glimmer of good news, and that was it. It was the match that lit the gas canister per se. So that's really why things happened yesterday. The economy has really not changed. I don't think many countries would celebrate 7.8% inflation, but again, expectations. This is what happens. Expectations change. If I told you a year ago today that inflation CPI was 7.8% and the Dow would be up 1,200 points or whatever it was yesterday, you would look at me like I was nuts because that's exactly what happened. So, I mean, things change. Again, I'm still with the bottom call, like we stated before, of 3,600. We'll chart it together. Let's go around the horn. Dow Jones futures up 169, Nasdaq up 45, S&P up 20, Russell up 0.57%. Crude oil is up 3.42%. Thank you to the dollar. It is down as well. Dollar is down today. 1.35% was down more than 2% yesterday. The dollar is getting absolutely whacked. We will track it. 10-year Treasury yields 3.813. VIX is actually green, 2356 at 0.13. Gold is up as well. Thank you, dollar, 1768. Gold is actually starting to move higher. We're going to go ahead and take a look at that in terms of a breakout. 2167 for silver, down 0.12%. Euro dollar, now above parity again, 103.21, 117, 139.26 for dollar yen. Yen has been absolutely strengthening with the dollar sinking. Pound dollar, 117.84.60. Bitcoin, yesterday Bitcoin was higher and really on just bad news, the FTX thing, right? Bitcoin, guys, is a proxy of the NASDAQ. Again, I own Bitcoin. So again, I'm not saying you should, I'm going to sell it or anything. No. My point is that it moves with the NASDAQ at this point. It's a risk asset. That's it. It's just the riskiest of the asset. What's good about Bitcoin is the blockchain technology and a way to decentralize currency that you can't make more of. I think that's a really great idea. But again, it is a risk asset. And just like anything else, risk assets fall. The dollar fell today and Bitcoin is still down. So is Ethereum. Yesterday, the dollar was down, tech stocks were up, Bitcoin was up. So the reason that Bitcoin bounced really wasn't any demand of Bitcoin, just more of the shorts closing because of risk assets being closed. Risk asset shorts being closed. So it looks like overnight we had a continuation of this risk asset closure or short squeeze. Let's go ahead and chart S&P futures. All right, we got a daily chart here. I do have this shaded here because that's our target. We're looking for that 200-day MA, which is 4082. Doesn't seem so far away from here now, does it? We're only 100 points away. 3980 was the next breakout level. Again, yesterday I thought 3900 would be retested. It did. We really didn't do much yesterday. A lot of the portfolio was doing work. We caught Apple calls yesterday. AMD came back from the dead. That thing was down nearly 80%. Well done, team, on the patience. And with that being said, 4082 is still our target by end of year. I think we do get that sooner rather than later. In terms of support, again, 3600 is still my support. You could see this trend line here. It was the 200 day on the weekly. You could see it here, the 200 MA on the weekly, but it's now 3623. So we'll leave it at 3600. We're not going to break the lows of 3500, guys, this year. Maybe next year. I'll concede that, possibly next year. But the bottom is in, at least for 2022. And that's great news. Should you go and run and buy the market today? I mean, that's really up to you. I mean, if you just want to trade, that's what we've been doing, trading around with futures, Forex, and options in terms of investing. Let's see if maybe we get a pullback here and there. Maybe we can get back to 39.25 and see where we go. But the market is continuing the good roll right now with that CPI number being down yesterday. Again, it's still elevated. It's just that everyone was short. Let's take a look here at the dollar index on the daily. You can see 104.61 is a big level of support. Let's place an alert there. If that were to go all the way there, that should get us to maybe, I would say, that 4,100 level that we're looking for. And then would probably fall on risk assets a little bit, pull back, and then we'll bounce off this 200-day on the dollar. That's a big move from 14 to 4. You're talking about a 10% move on a currency like the dollar, reserve currency. So again, we're going to get some nice green shoots, but not just one straight shot to the moon. Don't expect that. Temper expectations, guys. Look at the VIX. Volatility index here. Again, beautiful trend line. We broke out of this channel. We bounced pretty close to the bottom of it, and we're now at 2357. Let's take a look at that yellow line there. We'll go to the daily. I think the daily will give us, here you go, right there. Look at that trend line that we had since December. So again, volatility index has been a little bit wacky lately. Obviously, not a lot of fear in the market. So the question really is, where is going to be our kind of leading indicator? And I think that's still dollar and bonds. The VIX, not so much, but the dollar and bond yields are going to be key. Let's go to the 10-year TNX index. Let's go to the daily. The daily here is at 3813. Give me a second. Give me a second here. I totally forgot to send the link of YouTube to our team. I didn't even have it written down and I forgot. Anywho. Okay, back to the 10-year yield. We're near the 50-day MA on the daily. So again, 3813, I have a support here of this gap to fill at 3657. I say we get there. I say we go ahead and hit the dollar on that 200 MA support. Again, it won't be a green shot, but that's something to look forward to. If we do break above 4,000, I believe that should be ignition higher. So we could get a little more to the upside. Just a heads up today, guys. Today is Veterans Day. Thank a veteran for their service, for our men and women of our military and our armed forces. Thank them for their service. We thank you if you are a veteran. Today, the bond market is closed, hence why yields are where they are today without a bid or an ask. So again, you're not going to get a movement in bonds today. Dollar, yes, and stocks, yes, and commodities. But 10-year, don't worry about it today. The market's closed for bonds. Today is 11/11. The actual day of Veterans Day was renamed Veterans Day after the end of World War I, the 11th day on the 11th hour of the 11th month, end of World War I. Armistice Day is what it used to be called. I'm a big history buff. Don't mind me. I love that stuff. So what are we doing today? What did we do yesterday? We do have Apple calls, or we had Apple calls. I'm still holding. You can see a little bit of rejection here I have for next week. So again, I'll see what I can get with those. And then AMD, what a bounce. Look at this. AMD absolutely on fire. Why is that? Because semiconductors were absolutely brutalized to the short side. So again, you're going to get a little bit of a relief. But AMD, take a look here, guys. You really just have this big channel here. So again, if you're willing to go to AMD here, your stop would probably be 83. You can probably squeeze out a couple of bucks and then see where you go from there. There is a gap to fill at 62.51. Maybe you fill that gap and then you could rebuy here maybe at 66. Again, it really depends on what you're trying to do. I think calls are the way to go. I think we can get to 72 on AMD. That is that Fibonacci retracement level from the weekly. You could see that just get us back to this actual support that we've been needing, and that's the 200 on the weekly. 72.5. I like it. The only thing is that AMD may be overbought, and it is on the 1 hour at least anyways on the RSI. So let's go and take a look at the daily. AMD has been a pretty nice one. So we got, a little bit more till overbought levels. That should get us to 72.5. Let's see if we can snipe that today for next week. I would not buy for today. I'm not wild like that. I don't want to do that. All right, so here you go. There's your target, 72.5. You got a break. Let's see if we get some volume into calls. Again, I would take a look for next week's 73s or 72s. So that's the 18th of November. Right here, 72s, 73s. These should be higher. So again, I would probably expect, based on this, maybe a 160 or 170 ask on those 72s or 73s, just depending on it. So again, I do like it. I will probably wait a couple of minutes before I get the day started. Obviously, let's see if we get that move to the downside. Maybe we start retesting some levels on S&P. Let's go to take a look at SPY and see exactly if there's anything to be retested in terms of support. And there is one, 392.50. $3 move wouldn't be out of proportion. 390 would be fine. But I think a break of 4,000 on S&P futures, you should squeeze higher on that. So we know our targets, guys. I still think a bottom is in. It doesn't mean we're going to get to 4,700 or 4,800 tomorrow. Don't expect that, please, because that's just not how it works. So 40.82 is my target. End of the week, I doubt it. That'd be 100 points today. Maybe by next week we should, ahead of Thanksgiving. Why not? Why not? Young Danny's asking, is Apple a buy at the current level? Are you still DCAing in your IRA? Yes, except my DCA in my IRA was 6,000. That's the max I can put in a traditional. I did it in January. I didn't get the best price. But you're right. Dollar cost averaging is absolutely the best way to do it. In terms of buying it here, I mean, I think Apple is fine here to buy. I still think that 170 is that big level we're looking for. Same thing as the S&P. So again, you could buy some here and then sell at 170 if you wanted to. But if you're DCAing over time, I mean, you could do a lot worse than Apple. Apple has been extremely resilient, outperforming its tech peers, as we know, but still on the lower end. Could we get a rollover? I don't say not by the end of 2022. We won't. I think we have hit peak inflation. I mean, we hit peak inflation in June. Thing is that we needed to roll over into services, and the labor market's very strong. A soft landing is definitely possible for the Fed. Inflation may just be transitory. We'll see. It's been a crazy bear market ride, but here we are standing here to help every single day. Back at it on a Friday. So with that being said, I still love Apple. I think Jim Cramer said it best. Own it, don't trade it. Well, I like to trade it too. So there you go. Well, we'll leave it there, guys. Have a great rest of your weekend. Let's go Cowboys. Cowboys play the Packers on Sunday. Please get this win. We need it to keep up with the Eagles. They're beasts. They're beasts. I mean, what can I say? I just hope we win the division, or at this point, just get into the playoffs and play them again. Have a great weekend, guys. And Manchester United, Real Madrid won. Excellent work. Have a good one, guys. Cheers.